Yeah, it's your boy Crypto Blood, and welcome to another episode of My Two Satoshis. It is October 30th, 2018, one day before Halloween, and one day before I'm out at the World Crypto Con in Vegas. Hope to see many of you guys out there. I'm very excited to get out there. But before we get started, the song pick for the day is from my man Raj. He said, play that Don't Worry, Be Happy song, and I appreciate that one, man. Yeah, you guys don't worry, man. Be happy. Life is short, and you got to make the most of it every day. Again, what's up, people? Got a new setup, as you can see. I've got, the chat room and stuff all to the left there, or to your right, to my left. I had to do an interview style type video yesterday, so I didn't change the video angle, and I'm like, hey, I might as well try something new anyway while I'm at it. So here you go. You guys let me know if you like the new setup. I'll have different things to the left there or right on your screen where I see fit. We have the Make Crypto Great Again hats down to the right corner. So make sure you guys jump over to cryptoblood.io and copy one of those. And I'm in the Busto chat room right now. Shout out to the Busto team. But today we're going to be talking about two items that caught my eye. One from Live Bitcoin News. Looks like they're saying they believe that Fidelity will have an uphill battle when it comes to attracting institutional crypto investors. And I thought that was interesting and wanted to look at this article. We'll read it together. I haven't looked at it yet. And the second article is about Ethereum miners. New study out is showing the profitability of mining Ethereum. They're in trouble, and they're saying that we may see more issues once this upgrade to Casper comes out and you have a reduction in the mining rewards for all the miners on the Ethereum network. So we're going to take a look at that and get your feedback, see what you guys think about that. The article was actually saying that even though the rewards will go down, that means the supply of Ethereum on the network or ETH in the network will go down, hence that will increase the price again at some point, but we'll see. Let's take a look at that Fidelity article first. It's out of Live Bitcoin News. As I stated, it says Fidelity may face an uphill battle to attract institutional crypto investors. Expanding the reach and appeal of cryptocurrencies remains difficult. Institutional investors are considered to be the holy grail to rekindle interest in Bitcoin and altcoins. Fidelity Investments is entering this market, albeit without too much fanfare. Analysts expect this company's impact to be minimum, they say. And this is, like I said, I wanted to read this because I thought this might be a good thing for cryptocurrencies in general as far as adoption goes, but we'll see what they say here. The decision by Fidelity Investments to tap into cryptocurrencies makes sense. It appears that the demand for exposure to these volatile assets remain high. Institutional traders have few convenient access points for Bitcoin and altcoins. A major player on the level of Fidelity can make the cryptocurrency industry go through a revival of sorts. That will only happen if the firm's customers are interested in this option. That may be a bigger problem than originally anticipated. Investing in Bitcoin remains a very risky venture, similar to other investment opportunities. Traders seem concerned over the high chance of losing their money in the process. Cryptocurrencies are far more volatile compared to traditional investment offerings. The cryptocurrency industry invokes a major trust issue. Bitcoin has no active regulation in the United States and most other countries. As such, investors and traders remain wary when it comes to this new asset class. Without trust, there will be no increased interest in cryptocurrencies. Building that trust can take months, if not years. Until a solid foundation is established, Fidelity Investments may not see any real success in this department. The article goes on to say here the importance of institutional products. So one also has to wonder if institutional traders are such a big market for cryptocurrencies. Other institutional grade products currently struggle for traction as well. Bitcoin futures contracts are one example. These options are not in high demand, with overall trading volume remaining relatively small This is despite a much lower Bitcoin price compared to January of 2018. No one will deny institutional traders are curious about cryptocurrencies. That is a healthy sign for industry as a whole. Pension funds and asset managers seem to be leading the charge in this regard. Turning that curiosity into actual investment, though, is a different matter altogether. Such a process will, according to some analysts, not materialize anytime in the near future. Addressing key concerns pertaining to cryptocurrencies will be the main priority. Ensuring funds are safe at all times remains a major concern. It is possible institutional traders won't get on board until an existing financial service provider develops advanced custody solutions. Fidelity Investments offers a custody service, but it remains unclear if the firm can convince traders in the near future. I don't know. I slightly disagree with this, and I just want to reiterate, I am not for the adoption of cryptocurrencies done this way through the old legacy system. I've told you guys that many times before, but I just want to reiterate that for new people to the channel. I am a strong proponent of peer-to-peer purchasing and exchanging of cryptocurrencies without any third-party intermediary. None of that is not needed. This is the whole point of cryptocurrencies. So with that all out the way, my assessment of this article, as far as them saying that they don't think the institutional traders are ready for this, I think they are. They just have to get everything up and running. Once Fidelity actually says, okay, we're live with this, I believe people will begin to see interest in this investment class, this new asset class, especially if they're going to add leverage to it. The traders are really going to come after it. The institutional traders, hedge funds, they're all looking for yield. You see what the stock market is doing right now. It is tanking, and they don't have anywhere to really pull their money. I mean, they can go into bonds, T-bills, and those types of fixed income. I still think that this is because this is a new asset class. This is the last frontier. And when stuff really hits the fan, I really feel like a lot of this institutional money will start to pour over into cryptocurrencies. And so if they have the infrastructure set up, Fidelity, Goldman Sachs, or whatever other investment banking institutions really start to lay the foundation, even Coinbase is, now has a custody platform as well. So I think if more and more institutions get their infrastructure built, the money will come. The money will definitely come, especially if the feds are looking to continually increase rates, though I'm not convinced. I think they're going to get spooked by the continuation of a sell-off in the equities market, and they're going to reverse course and stop raising interest rates. But if they do continue to raise interest rates and shoot themselves in the foot, then of course Wall Street is going to have to go somewhere. They're going to have to go somewhere. They're going to go into fixed income for sure. But I also think they're going to pile into this new asset class called cryptocurrency. So you guys let me know, do you think Fidelity has an uphill battle with this new institutional program that they're offering? I highly doubt it. I truly highly doubt it. And I wouldn't come to that conclusion until the actual product or service is live for them to make that conclusion. So I think they're a little premature here with this article. But you guys let me know your thoughts on that for sure. The next article is about Ethereum miners. Are they in trouble? Have Ethereum miners been losing money since August? Longhash shared details of its analysis on Twitter, claiming that Ethereum miners could be losing money as the hash rate has fallen by 12% since August. Ethereum miners may not be having a good time, though the price of Ethereum coin has stabilized around 200 and it continues to be the second largest cryptocurrency in the world by market cap. Miners may not be winners in this case. A new analysis by Longhash suggests that Ethereum's hash rate has fallen by as much as 12% since August, which means that miners could be losing money instead of gaining rewards for all of their efforts in mining the digital currency. Longhash suggests that the right question for the moment is not how much the coin will fall, but when will the price rebound to 300? Following the basic rule of economics, lower supply should lead to higher prices. As the amount of Ethereum available in the market decreases, the currency will finally experience some price rebound. However, recent activity in Ethereum suggests that the crypto is going the opposite way. ETH has been experiencing massive sell-offs, especially with ICOs, which has led to an increased supply of the coin. A BitMEX report published at the beginning of the month suggests a similar trend. A majority of the 220 ICO projects that survived for their report had sold ETH in August and September. In fact, ICO projects hold only 4% of the total ETH supply. A large portion of the current supply comes from miners whose only incentive to continue their activity is profit. If the cost of mining coins exceeds revenue, many miners will stop, and this will lead to less ETH in the market and hence higher prices. Longhash asks, when will miners consider that ETH is no longer profitable? Mining costs depend on 4 factors: power and price of mining machines, the depreciation costs on mining machines and hash difficulty, and thirdly, mining policy, and lastly, the most importantly, the cost of electricity. Ethereum relies on GPU mining, depending extensively on RAM bandwidth, which fails to improve performance in relation to cost. Buying ASIC machines could also be problematic as they may not fetch a fair value after 9 months of use. The rise in mining difficulty ensures that a mining machine's income doesn't cover its electricity costs any longer. Low price power is therefore critical for the miners. And then the last paragraph here, guys, talks about the new Ethereum mining policy that will be implemented with the next upgrade. It says the Ethereum mining policy will further hurt miners as the block rewards will be reduced with the IP 1011 hybrid Casper FFG draft. Miners getting 3 ETH now will only get 2 ETH post upgrade. As all these factors make mining difficult and more likely a loss-making business for miners, many will abandon the activity, leading to lower supply and potentially a higher price. So, I mean, that's a fair assumption. You can make that, you can come to that conclusion that if miners drop off, you'll see the price of Bitcoin, or I should say Ethereum, rise. The only problem is that we're not talking about Ethereum in a universe by itself. You know, it's all predicated on what Bitcoin is doing, unfortunately. And, you know, I've said this for a year and a half now since I started the channel. And, you know, really it just shows the maturity level of the crypto industry. I think we're very young in this game because we still use Bitcoin as the benchmark for everything, just a broad stroke. And it shouldn't be that way. And I think we can say that the cryptocurrency industry is maturing once we see that peg kind of break from Bitcoin and the altcoins. And it will break. It will break when you have an actual real demand for a lot of these tokens, you know, to actually use the services. You know, you have to have these tokens, so you'll have a bid under a lot of these tokens and projects that end up being successful. It matters almost none, or at least the correlation will come down from 100 down to either 0 or negative correlation with Bitcoin. And when that happens, that's when I'll know, okay, we're really starting to grow and mature in this crypto space. So you guys let me know, like, do you think the ETH miners, all you ETH miners out there, let me know, are you making money right now? What are you going to do when this upgrade comes with Casper? And now it's been pushed to February or January of 2019. What are you guys going to do? Are you going to continue to mine, especially if it's not profitable? Will you continue to mine? Let me know. I'm very interested to know. That's one thing about cryptocurrencies, especially the POS coins. We've never had a scenario where the difficulty rate and price and demand for the token becomes inverted to the point where it's almost a recursive situation of no one wants to buy the coin because people are selling the coin because it's not profitable to mine, and you have all these factors playing in at once. We've never had a scenario where we're upside down or that deeply upside down where you have a coin just kind of spiral into a black hole. We used to fear that could happen with Bitcoin in the earlier days, but never did happen. There always seemed to be a nice demand for Bitcoin at those prices for where mining profitability was very low. And it seems like we're there right now with Bitcoin, but I don't know, man. This is still an experiment, and we don't know what does it look like when you have a coin that isn't profitable and there's no demand for the actual coin. Those two factors can be a death blow if it's too long, if it's sustained for too long of a period, because then you don't have any security. All the miners jump ship and leave the network. So at the end of the day, it's a business for these miners. I know it was with me when I first started mining. I did it for money. That's the only reason I invested capital, to make money, not anything else. So you guys let me know your thoughts on both of these articles. Is Fidelity really in trouble? Do they have an uphill battle? And then secondly, are these miners on the Ethereum network in trouble with how low Ethereum's price has been for extended periods of time? So that's pretty much it for today, October 30th, 2018. That's my 2 Satoshis. Your boy Crypto Blood. Be happy. Holla!